Good morning and welcome back to Almus Market Mornings. And just like that, on Friday, while we were discussing on potential escalations, Sunday marked a day where both sides refrained from military actions. This provided some significant relief to oil prices, which are down about 6 to 7% on today's opening. Yields are touched lower and a bit of a correction in dollar index. But as things stand, these are not yet points where we can claim reversal. Oil is sensitive enough, and so are yields. Speaking of which, this week, we have the Federal Reserve and the Bank of Japan interest rate decisions. Markets are primarily not expecting any hike by the Fed this week. But then there are those who are still pricing a chance of a hike. Let's understand all this from Jacob. Good morning, sir. What are you watching out for this week?
Good morning, Swaraj. A lot to look forward to this week, but let's start with the main focus of late, which is the situation in the Gulf. Over the weekend, there's been some mediation efforts from Oman and Qatar to discuss a framework of managing the ship traffic through Strait of Hormuz. And Pakistan also reportedly explored a path towards restarting the US-Iran talks. Houthis signaled that they are not seeking a broad closure of the Bab al-Mandab Strait, which was stopping the Saudi shipping from going through. So all this gave some sort of a relief to the markets over the weekend, and we've seen oil also now, somewhat corrected from the peak. It's about 8 to 9% down, and that has its own impact on all other markets as well. Interestingly, China also stepped up efforts to revive the US-Iran talks by backing the Pakistani mediation and to continue the negotiations. And the Chinese are not directly involved in any of these efforts, but they have a huge interest in the peace, coming because they are the largest importers of oil from the Gulf, and that's the reason why they are also involved in it. So there's no major statement either from Iran side or from the US side. So markets have, I would say, some temporary relief for the markets, and of course it was strained over the last 1 week, and that has seen some correction as well. In the stock market also, not unusually, the Japanese and the Korean markets, which gain a lot during such benign times, have not gained today, but other markets are actually gaining. This also gives an indication that now the tech sector remains cautious on taking the market further up, even as they wait for more results from the big tech companies. On the yield side, overall they are down by about 8 to 9 points from the recent peak, which was for the multi-month highs, and they created a lot of tensions among the bond market players. There's a modest pullback in the currencies, with the dollar giving up some gains, but broadly, dollar is still sticking on to the the support, which was earlier the resistance at 100.50, and though it is still lacking the direction actually. So I think probably the Fed meeting could provide some food for the dollar, because the last time it broke above the key resistance at 100.50 was after the Fed meeting, when the dot plot indicated at least one rate hike this year. Of course, market saying only less than 30% probability of a rate hike in this month's meeting on Wednesday. But some analysts keep an open mind in view of the renewed surge in oil prices, which can lead to some sort of a hawkish statement from the Fed. So that is something we are looking up to. And interestingly, the Japanese PM has made some comments about the yen, and saying that various factors affected forex market, and he's also said that the government's efforts to boost country's growth potential and competitive advantage will increase the market trust in the end. So indirectly hinting that the government and the authorities are concerned about undervaluation of the yen. Market, of course, not reacting much to these things, and the market is nowadays too big to react to such statements unless they see a change in the basic fundamentals. We do not see this direction changing So in Japan, the concern continues to be about their fiscal, and therefore, unless they raise rates, perhaps which could make the yen more attractive. Until then, the yen will be on the defensive. Now, speaking of a central banker statement, we have had some statements from our own RBI Governor, Mr. Malhotra, and the usual statement, of course, was the RBI does not target any specific exchange rate or band, but he did say that the currency is not overvalued and could even be considered as undervalued in both nominal and real effective exchange rate terms. And this is a statement that has come, very rare statement, I would say. And not sure how much market would react to it, but then it really shows how what RBI believes in. Whether the market reacts to this or not is something that we'll see. He also mentioned about banks having mobilized 32 billion under the RBI measures announced recently. And apart from that, there has been 7 billion inflow into the bond market as well. So rupee was, seen testing the near all-time highs on Friday to start with, and then of course that was the reaction to oil crossing 100. But then RBI, quite unsurprisingly, I would say, entered the market before the market open, and intervened to bring it down below 96.50, and most of the day it traded below 96.50 as well. And with the weekend developments, now the India market is showing it trading around 96.20 levels. No doubt, the headlines from the Gulf would be guiding the market. In fact, not just the rupee market, most of the markets as well. And coming to this week's expectations, Fed rate decision, obviously foregone conclusion. Of course, Kevin Walsh is not going to give us anything because he's tight-lipped, and there you can almost discount any sort of forward guidance from him. Therefore, probably market has less enthusiasm because no rate hike expected, and Fed statement is also going to be very limited. So that's quite probably an uninspiring event this time. From BOJ, again, statements will be seen now that yen is closing in on 165. Whether they indicate more rate hikes in the coming meetings is something that we will look ahead to. Bank of England on Thursday, not expected to change. Broadly, all central banks are expected to keep their rates on hold, and their statements about the future path is something the market looking ahead to, hoping to get some sort of a clue. Not much hopes there. And of course, the oil price volatility will also keep the central banks probably saying that their actions would depend upon the market dependent factors, and therefore with volatility, I think it's difficult to see central banks also acting in a hurry, because up one day, down another day. So I think that's kind of keeping their options. They'll have to keep their options open. Apart from that, we have the GDP data from US and PCE numbers. PCE numbers might reflect a lower number. This is the impact of the CPI and PPI coming lower earlier this month. Once again, see, the oil prices have again gone up after the CPI, CPI numbers were announced. And so this month's number from PCE may not be given that much of weightage. So there is a lot of data and events lined up, but market does not have too much expectation of any surprise from these data or the events. And therefore, I think with summer markets in the Western world, I think we just hope or expect a rangy market to sustain. That includes even the rupee, which should move between 96 and 96.5. Thank you.
Thank you, Nick. And yes, we start the week with a bit of a more positive development in terms of geopolitics, and that seems to have sort of given a lot of asset markets a bit of a breather, including the rupee. Interestingly, we saw Governor Malhotra in an interview say that banks have already mobilized $32 billion with recent measures like FCNRB on the concessional swap facility. With weekend developments, some pressure does seem to be of the rupee for now, but this week we have the Fed meeting to look forward to. As JK mentioned, Kevin Walsh is tight-lipped, so not much of a forward guidance can be expected from there. We start the week with also slightly lower yields, which are off its multi-month highs. Modest pullback in currencies with dollar giving up some gains, but dollar index sits comfortably trading above its key support levels. That's it from us today. Thanks for listening. We will catch up tomorrow with the fresh round of updates.